Hi everyone, I'm previewing the important things for traders to watch this week, and I can't do that without talking about Bitcoin's big break above the 10,000 level. I think it's a defining moment. GKFX Prime presents the week ahead. It's either a step towards record highs or a head fake that sees all cryptocurrencies drop back down. I'll share my thoughts on that in a minute and run down the highlights from the economic calendar. Before I get started, did you know that the first ever Bitcoin transaction was the purchase of 2 pizzas worth 10,000 Bitcoin on May 22nd, 2010? That has to be the most expensive meal ever. Those 2 pizzas are worth over $100 million at today's Bitcoin price. And now, May 22nd is known as Bitcoin Pizza Day. If you like my little Bitcoin factoid, please click the like button. It really does help us spread the word about these videos. So the economic calendar starts off with July manufacturing PMIs from the likes of China, Germany and the USA. The final readings are expected to hold pretty steady from the preliminary readings, with only the US set to see a drop-off. The RBA will likely keep rates steady at its meeting on Tuesday. Service sector data, including from China, Spain and the US, are on Wednesday. The Bank of England meeting is Thursday, then we round off the week with China trade data and the big one, non-farm payrolls, where US jobs growth is expected to slide to around 2 million in July. So, time to stuff your wallets with Bitcoin CFDs? Well, first up, let's remind ourselves of the price action. Bitcoin's record high is $19,783, basically $20,000. Buying at 10,000 is a 50% discount for anyone who believes in Bitcoin, so it's easy to see why this price level is so important. So what caused the break higher? I think it's hard to ignore the parallel record high in gold. Bitcoin is considered a digital hard asset like gold. To my mind, the reasons for holding gold and Bitcoin are very similar. When every dollar, euro or yuan you own is being devalued by governments and central banks, it makes a lot of sense to own an asset that keeps its value. Okay, sounds reasonable, Rich, but where's the proof, I hear you say? I'll tell you one place to look is open interest in Bitcoin futures. Open interest is the number of contracts outstanding in futures markets. It just hit a record high of $724 million on the CME. That tells you that institutional investors are the most active in Bitcoin they have ever been. An analyst from investment bank Oppenheimer even recommended Bitcoin over gold because the price is less extended. Now, where does the chance of a head fake come from? I'm watching funding rates. Across all the Bitcoin futures exchanges, we've seen some of the highest trading volumes ever at $40 billion, and that's a good thing. The volume is supported by leverage and funding rates have gone up. In order to go long on some Bitcoin futures, traders have been paying 12.4% per month. That's fine while the price rises, but it won't be a sustainable cost if the rally pauses. If the price goes sideways, those traders could be forced to sell out and take Bitcoin back below 10,000. Right, thanks everyone, good luck trading and make sure to subscribe to our channel so you don't miss the next video.